Cash flow statement. A cash flow statement is a report that projects the timing of money in and money out in the immediate future. The report includes a time period and duration. The period is the segment of time in which the report shows money in and money out, such as weekly, monthly, quarterly, or other time period. The duration is the length of time in the future being projected. Most often, cash flow statements use monthly periods, projected 12 months into the future. Review the example in this table that projects 3 months forward. So notice that in January we have $16,000 of money coming in and $15,000 money going out for a difference of $1,000. So we're actually coming ahead with extra money in January. In February, however, we have $14,000 coming in but $16,000 going out. So that's $2,000 more money going out than in. So that's minus $2,000 in cash flow for February. In March, we have the same amount, $15,000 going in and out. So there's no change in cash position, 0. So January, we're up $1,000. February, we are down $2,000 for that month. And then March, we're break even. Here's another example. In April, we have $13,000 coming in, $12,000 going out for a difference of plus $1,000. So that's good. In May, we have $14,000 coming in, $12,000 going out for a difference of $2,000. That's good as well. In June, however, we have $15,000 going in, but we have $17,000 going out for a difference of minus $2,000. So we're actually down in June by $2,000. So cash flow statements include one more important item, a running balance of the cash surplus or deficiency. Let's review this example where the balance for the current month is added to the total balance of all of the previous months. So in January, $16,000 in, $15,000 out for a difference of plus $1,000. So our balance is $1,000 at the end of January. We're up $1,000. In February, we had $2,000 more dollars going out than coming in. So it's a negative $2,000. So we add the negative $2,000 to the balance of $1,000, which leaves us with a negative $1,000. So when we consider that we were up $1,000 in January and then down $2,000 in February, in total we're actually only down $1,000. And in March we're break even. $15,000 going in, $15,000 going out for a difference of 0. So if we add 0 to the minus $1,000 balance from February, there's no change. It stays at minus $1,000. So the running balance is minus $1,000 as of March. Let's look at another example of running balance. So in July, we had $22,000 coming in, $20,000 going out. So we're up $2,000 for the end of July. So our running balance is $2,000. In August, we had $21,000 in, $20,000 out for a difference of $1,000. So we're up $1,000 in August as well. So when we add the $1,000 to the $2,000 from July, we're now have a running balance of $3,000. In September, we had $18,000 in, $20,000 out for a difference of minus $2,000. So we have to subtract $2,000 from our running balance of $3,000, which leaves us with $1,000 of surplus at the end of September. So in the example that we just looked at, the starting balance was 0. In other words, just before July, the starting balance was 0. And this makes it easier to see if future projections will result in a surplus or deficit. But sometimes the business will use its actual cash balance in the cash flow statement, as this makes it easier to see if the business risks running low on cash. Let's repeat the previous example using the starting balance of $2,000 instead of 0. So in July, we end the month up $2,000, but we also started July with $2,000 in cash. So we add the $2,000 to the $2,000 we started with for a total running balance of $4,000. And then in August, we made another $1,000. So our $4,000 plus the $1,000 becomes $5,000. And then in September, we lost the $2,000. So we subtract that from the $5,000, and now we're down to $3,000. And that gives us a more accurate view of what our current cash position is. GoVenture is one of the original and most widely used series of educational games and simulations in the world. Discover a better way to teach and learn at goventure.net.